Good evening and warm welcome to all the participants. This is the 172nd WiseViews Leadership Conversation, and we are fortunate enough to be joined by Mr. Tamal Bandyopadhyay. Good evening, sir. Please join me in welcoming him. Good evening,
Good
sir.
evening. Good evening.
What I will do is I will do a brief introduction, sir, with your permission, and then hand it over to you for your opening remarks. This is going to take just about a couple of minutes to share my screen. As I mentioned, these are WiseViews Leadership Conversations, started about 3 years back, and every Friday we hold these sessions. But this time we are holding it on Thursday, and this is session number 172. With such a busy schedule, I am actually thankful, grateful to Sir, Mr. Tamal Bandyopadhyay, for giving this slot for us for this session. This is a great session, and we look forward to having great learnings and insights from Sir. After this intro, we'll have the opening remarks, and that will be roughly for about 20 minutes, and then we have two clusters of Q&A. We'll have a great conversation. Let me take this opportunity to introduce Mr. Tamal Bandyopadhyay. He is an award-winning author and renowned columnist who has dedicated nearly 3 decades to the study of Indian banking sector, making him a leading voice in this critical field. His weekly column, Banker's Trust, published in Business Standard, is celebrated for its incisive analysis and informed opinions that resonate with both industry professionals and the general public alike. Currently, he is serving as the consulting editor for Business Standard and as a senior advisor to Jana Small Finance Bank Limited. He has played a pivotal role in shaping financial discourse in India. He was also a key member of the team that established the Financial Daily Mint and served as an advisor on strategy at Bandhan Bank Limited, the first microfinance company to transition into a universal bank in India. Mr. Bandyopadhyay is the author of several best-selling non-fiction works, including his critically acclaimed book Pandemonium, The Great Indian Banking Tragedy, which has garnered multiple prestigious awards, including the Tata Literature Live Best Business Book Award and the KLF Best Business Book Award. His other notable publications, such as Roller Coaster, An Affair with Banking, HDFC Bank 2.0, From Dawn to Digital, and Sahara, The Untold Story, further showcase his deep understanding of the financial landscape. In addition to his literary contributions, Mr. Bandyopadhyay's insights have been recognized globally. He was nominated by LinkedIn as one of the most influential voices in India for 3 consecutive years and was listed among the top 10 writers in finance worldwide. His remarkable achievements were also acknowledged with the Ramnath Goenka Award for Excellence in Journalism in 2017. Fantastic, sir. We are so fortunate and thankful to you for agreeing to speak to us on this platform this evening. And I will take one more moment to introduce my esteemed colleague, Professor Dr. R. Prasad. He's a senior director in academic wing at ICFAI Group. He brings a rich experience of 3 decades as an entrepreneur, as a corporate professional, and as an academic now. He holds BTech from IIT Bombay and PGDM from IIM Kolkata. And he has published several articles, edited various books, and presented papers in conferences in India and abroad. Welcome to you as well, Professor Prasad. Thank you so much. I'll stop sharing the screen here. And sir, we are all set to understand this topic of a small finance bank, and especially in this country, how financial inclusion has been attempted and achieved. What is the status report, and what are the challenges, and what is that we who are a little away from this, a large number of us who are a little away from this, need to understand, and how we can partake in this process. Over to you, sir. Awaiting to learn from you. Thank you so much.
Namaskar. Good evening. Thank you for your very kind introduction, Mr. Rao. My throat is not in the best of health, so bear with me if I cough in between. So there are two subjects actually. So it's a divided theme. One is financial inclusion, and other is the role of small finance bank in this particular area segment of financial inclusion. So I'm sure many of you are aware of that. This financial inclusion, this particular term was coined by RBI Governor Dr. Reddy, YB Reddy. Now, when he was drafting the monetary policy of 2000 financial year 2006, those days there was two policies, one in April and one in October, November. So one was, so then the April policy, it was April 2005 policy meant for 2005-06 financial year. So he was toying with the idea of financial exclusion. Then one relatively junior person from the RBI research department suggested, why not financial inclusion? So instead of financial exclusion, since then, that's the first time RBI coined the word, and that's how the financial inclusion term came into being. Now, what is financial inclusion? I think there is no misconception about it, or rather, I would say, put it the other way, there is certain smoky thing here, because we feel that financial inclusion is the accessibility to financial products, but that's not the only thing. It's not accessibility alone, it's also the affordability. Whether those services are affordable, so which means is responsibility also, responsibility by the lender. It has to be responsible financing, responsible financial services. So it has to be affordable and it has to be responsible financial services. So what would be, it would be saving, it would be a credit, it could be payment, and even it could be insurance, which at this point of time IRDAI is taking it forward, where RBI, with RBI started, Dr. Reddy started now IRDAI in insurance sector also. The insurance for all, that's the slogan now at this point of time. So that's the classic example of financial inclusion. I mean, how we have been pushing, apart from what Reserve Bank of India had done, the government project, the Jan Dhan Yojana, what government had started. So I think it was announced in the August 2014. And as we speak, till about early November, 1st of November, there is some 53.99 crore, 54 crore Jan Dhan accounts have been opened. This is the world's largest financial inclusion drive, I would like to believe, because I can't think of anywhere else in the world it had happened. And that has changed dramatically the scenario. The financially included population, I don't remember the number as offhand, but that has since then it has changed. It was launched, I think it was announced in August 2014, and as we speak, close to 54 crore people have the accounts, and the money is not much. It's roughly about 4,000 per person. It's I think 2.4 trillion, 2.4 lakh crore. That's the money kept with the banking sector. Now, if you look at this Jan Dhan project, the inside story, just look at the numbers. 53.99 crore account holders, out of which 42.05 crore is being done by the public sector banking industry. And the private bank's contribution is just about 1.67 crore. So it's the public sector banks that had done the human service there. I mean, others are a little bit of RRBs and cooperatives, etc., etc. My understanding is this small finance bank is also included here in the private sector, which is only 1.67 crores. It's largely the public sector. So what started Reserve Bank of India in early this century with lot of, I would say, a lot of commitment, dedication, and Dr. Reddy and then Subbarao carried it forward in multiple ways. And then the Jan Dhan Yojana gave them a booster shot. Now cut back to the other part of the thing, the small finance bank. It's very interesting that Jan Dhan Yojana, Jan Dhan was announced by Prime Minister Modi in August 2014, and SFB guidelines were issued by Reserve Bank of India just before, 1 month before, July 2014, if I'm not mistaken. I'm just telling you from my memory, but I think so. It's just 1 month before. But is there any connect between the two? Not exactly. Now, why did the SFB come into the picture? Let's go back to the Reserve Bank of India's approach to bank licensing. We all know about the bank nationalization in 1969 and the first phase, and then there was one more phase there and all. And then early 90s, 91 was the economic liberalization. And then Reserve Bank of India in 94, 95 allowed the first set of private banks to come into being. Those days, 100 crore was the net worth. That's capital you need to bring in. And there's I think 10 banks came in the picture. Some of them like ICICI, HDFC, IDBI, they were the solid financial institutions, be it a project finance or mortgage firm. They came into the picture, and then certain newcomers were there and all. But all of them did not survive. That's a separate story. I don't want to deviate and all. So 1995 was the first set of licensing given. Now the second set of, that's a 10 bank. Then the second set, I think it came around early this century, 2002-3 sometime, when there only two banks got, which is Kotak Mahindra Bank and Yes Bank. And then another 13 years down the line, 2015, 16, at that point of time, RBI again asked for applications, and two more banks got. One is IDFC and one is Bandhan. IDFC was sort of rescue act because IDFC, the financial institute, the infrastructure finance company, which government envisaged in a different way. I think it was an offshoot of 1997 budget announcement, but it was not going anywhere. So it had to be converted into a bank. Otherwise, there was no future for IDFC. And Bandhan is India's first instance of a microfinance entity becoming a bank. So between 95 and 2015-16, in this 20 years, thrice Reserve Bank of India opened the door for bank licensing, and 14 banks got licenses, and not everybody survived. Actually, the second and third slot, two each, they survived. By the first slot, 10, most of them did not survive. So then RBI was thinking that, why not look into another set of banks? I think Dr. Nachiket Moore was the executive director of ICICI. He headed a committee, Dr. Raghuram Rajan's time and all, and they came out with the two ideas, this committee. One is a payments bank and one is small finance bank. Essentially, they will have almost all the features of universal bank, but in a shorter version of that. And which is why the capital requirement is less. And there are other like for instance, the capital adequacy ratio for a small finance bank is much higher, 15%. 75% of their loan book had to be those kind of loans which have the tag of priority sector lending. As we all know that normal universal banks need to lend to the priority sector 40% of their loan. So those characteristics should be present for 75% of the loans given by the small finance bank. And another difference was that the 50% of the loan have to be capped at rupees 25 lakh, not more than 25 lakh. That was the thing. In between, I should have mentioned that in the 90s, India experimented with another set of banks, meaning apart from the universal bank, that's called local area bank. LAB. Again, that did not succeed much. In fact, one of the local area bank, Capital Local Area Bank, has been converted some time back. I think Capital was the first, is one of the local area bank that converted into small finance bank at the first round itself. So anyway, following the Nachiket Moore committee, Reserve Bank of India thought that we need to experiment with this kind of smaller banks, which will actually handhold the entrepreneurs and the MSMEs and SMEs. But as you see, that 75% of their loans have to have the tag of priority sector, and 50% of their loans would not be more than 25 lakh. So naturally, they have to be there for the smaller guys, relatively smaller guys, and the different segment of the society, not competing with the universal bank. They're created. So obviously, the underlying theme was the financial inclusion. And along with the small finance bank, there was also another set of banks Reserve Bank of India gave license to, which is the payments bank. Now, as we speak, payments bank is a failure. All of us know that. Why it's a failure? Because what can payment bank do which the others bank cannot do? I mean, it's a facilitation of the. I mean, you facilitate payments which any smart bank, or right now almost every bank can do that. So payment bank does not have a business model as such. So many of them actually, have folded off or not doing well. A couple of them still work, particularly run by the telecom companies, and it's not a business per se. It's just to keep their subscriber base. It's a sort of sticky factor they are trying to create through this. So let's not talk about payment bank. Now, small finance bank, as I said, August 2014 was the Jan Dhan Yojana announcement. Just before that, July 2014, the draft guidelines came, Reserve Bank of India. And then I think it's a very quickly, Dr. Raghuram Rajan's time, I think within a few months, if not, probably October, November, sometime the final guidelines. And by January 2015, they actually give all the numbers who all applied. I think there were some 72 odd applications were there. And by September 2015, so it's a pretty quick thing and all. So 10 applications were selected to get the small finance bank license. And as I said, the first one was the Capital Small Finance Bank. Capital actually was a local area bank, and it got converted to a small finance. And then we have in the different segment, like in South, we have with Jiban, Jana, Equitas, etc. In Rajasthan, we have AU Finance. Then South EASF also, ISAF also in South. Then Northeast, you have RGVN. And then here is Suryoda in Mumbai. So those are the kind of thing. And later, of course, two more in the due course added. One is in the first set of license, they got Capital Local Area Bank one of them. Rest of them were all finance companies. And then sometime 2020 or 21, one cooperative bank, Shivalik Cooperative Bank, got converted into small finance bank. And another bank, which was a multi-state cooperative bank, PMC, which had some problem. Now it's also become a small finance bank called Unity Small Finance Bank. So at this point of time, I think we have 11 or 12 such banks, of which one bank changed hands. The management has changed. That's the Northeastern RGV and Northeastern Bank, which got into trouble. Capital got eroded, etc. And then new taker has come. As we speak, it's been now revived. Now, so this is the small finance bank, and this is what the financial inclusion. Now, the coming to the theme is that is the other small finance bank, do they serve the purpose of financial inclusion? I'm afraid you will be disappointed. I'm not very sure that's what exactly is happening. Because what is happening for most of them, it's not a destination, it's a journey. So all of them actually want to become universal banks. So it's not that I am a small finance bank and I'll continue to be to remain small and I will serve this segment of the society, etc. That's not the case. Their ambition, their dream is to become someday big universal bank, and one of them had already applied for it, which is AU Small Finance Bank. Now, Reserve Bank of India has certain, parameters that you need to fulfill in terms of NPA, in terms of capital, in terms of profitability, and then you get qualified to apply for a universal bank. And every bank, every small finance bank, or rather, I would say most small finance bank aspiration is to become a universal bank. That's point number one. So they are not here to serve only the poor, downtrodden, and that kind of segment of the society for financial inclusion. It's their journey, not the end, not the destination. That's point number one. Point number two is this, so banking is only one business where the raw material and the finished product is the same. Nowhere, whether it's a cement factory or chemical or medicine or even pizza, the raw materials are different, finished product is different. But here you take my money and you give the money to somebody else. My money in the form of deposit, and this you give in the form of loan. So these guys need deposits. Okay, now how would they generate deposit? Because small tag itself is a sort of, is a negative factor, because the deposit is all about trust. Now, if I don't get the deposit, then how would I serve this purpose, etc.? They have been struggling right from the beginning. So actually, each of the small finance bank, they run two banks within one bank. One bank for liabilities and one bank for assets. So you will find, because those hinterland of India and the borrowers, which your target borrowers, which is the so-called below the poverty line, or just that kind of segment there, do they have money to save, enough money to save? They don't. And even if they have little bit, will they keep their money with the small finance bank? Probably not. They will be very comfortable with the State Bank of India or a public sector bank, because as I said, banking is all about trust. So what you are seeing, all the small finance bank, actually there are two banks within one bank, one for the liabilities. So they are fighting it out with the mainline banks in metros, and their only weapon to fight it out is a higher deposit rate. So as we speak, like for instance, Unity Bank is offering 9.5%. for fixed deposit to the senior citizen. If I'm not mistaken, this is the highest deposit rate for being offered by any bank in India. I'm not getting into whether it's good or bad or thing, but I'm telling you their handicap is this. Because the moment you call them small, people will have reservations about keeping money with them, and so it's very difficult for them to give money. To get the money done, they have to fight it out with all the sophisticated new private sector banks in the urban segments. So that's as a dichotomy, you can just say that, or whatever it is. It's a very different kind of existence they have. They need to collect deposits, otherwise there is no banking business. In order to collect deposits, they find their small tag is a handicap, and they cannot also collect deposits from the people whom they are likely to serve, which is the that up to 25 lakh range and the 75% private sector, etc. So they need to be in Mumbai, they need to be in Bangalore, they need to be in Mangalore, Chennai, all the metros. They need to put up big shops, a lot of capital investment, etc., and fight it out with the mainline banks to get the money. And then comes the lending part. In the beginning, everybody was, if you have any conversation with any of the small finance bank, their two biggest challenges were, one is the liability. As I said, the banking is a business of trust. How do we create a trust when you can call yourself, yes, I am a scheduled commercial bank. You put the certificate in your branch, but the small tag, it does not go well with the depositors. What is this small? Is it a cooperative bank? Is it, what kind of animal is this? They will think twice, thrice, four times. So it's very difficult. And second part, of course, was the compliance part. It's like Reserve Bank of India's, and particularly this current RBI is a very strict about compliance. So they thought that cost of compliance and the cost of gathering deposit, they are too much. That's the technical aspect. But the other part of is this: if you expect them to be in this so-called financial inclusion space, and that space, again, it's not a very from a lender's perspective, that's not a very great pace at this point of time. Because what was happening is this: ever since they were born, I think 2015 16, they all of them came around 17 18. So before that, the GST, and first the demonetization, then the GST and the COVID, all sorts of things came, which was pretty difficult to manage. And then all of us, we know that what's happening in the unsecured loan space, smaller loans, unsecured loan space. As we speak, there's a credit cost is going up. I mean, there are multiple reasons behind that, because this is one space where the banks and the NBFCs and the loan apps, everybody fighting it out, and Reserve Bank of India is calling it push loans, not they don't require the loan, but it's been pushed down through their throat. It's not demand driven, and it's the usurious interest rates, etc., etc. Reserve Bank of India talking about that. Now, as a result of that, the entire thing is pretty vitiated. And if you look at the balance sheet of the small finance bank, you will find that those who were dedicated to this segment of giving unsecured loan, etc., they are now changing their business model. It's more and more secured loan, not unsecured loan. They are just clamping the closing the tap on unsecured loan. Unsecured loan, again, meaning that the smaller loans, no collateral loans, which is easy for that particular segment to raise. But because of the atmosphere is pretty different, and it's a little vitiated, so all and every small finance bank, without exception, now they are rejigging their balance sheet and all. Because at the end of the day, as we speak, I think all of them, yes, all of them, Capital also got listed. So all of them are listed entities. Except for the RGVN Northeastern, all of them are listed entities. So they need to also, apart from the depositors and the borrowers, etc., etc., the investors also, they needs to be catered to. And for that, I mean, you can't afford to have that kind of credit losses. So they are clamping down on the unsecured loan, unsecured small loans and all, and they are getting into more and more into secured loan, like say mortgage, like loan against property, those are gold loans, etc., etc. But the typical unsecured, non-collateralized small loans, etc., they are very reluctant to give. The sum and substance, next 2-3 minutes, I'll end is this. the two sets of new animals which Reserve Bank of India brought to the financial system in 2016-17. One is the payment bank and one is the small finance bank. Out of which payment bank is an outright failure. What can payments bank do extra which the normal banks cannot do? So that's that one. The second set is a small finance bank. There is no casualty as such, but their business model is changing. Business model, when I'm saying the business model is changing, is this what I'm saying? They are getting into from unsecured to secured. And that's the, I mean, so the basic mantra or the underlying theme of this financial inclusion, looking after people, spreading the reach of banking services. I think that's not exactly what's happening, because they are working as a, I mean, they are all of them are listed entities. They have to cater to their needs of their investors. They have to look for the interest of their shareholders. So they need to get the right kind of business model. And on the one hand, as I said, they have been also struggling to on the liability side, there's a handicap because small tag is not so good for them. And I'm repeating that if for all of them, I think without exception, whether some of them are admitting it openly, some of them are not admitting it, but in their dreaming or their ambition is this to become a universal bank. So it's a part of the journey. Tomorrow I'm small finance bank. Day after tomorrow. Today I'm a small finance bank. Tomorrow, day after tomorrow, I would like to be a universal bank, and one of them has already applied for it. So yes, financial inclusion perspective in India. I mean, if you look at it in the past 20 years, we have come a long way, and there are multiple contributing factors there. Reserve Bank of India has been doing a phenomenal job, right from coining the word to doing everything which Dr. Reddy did, which Dr. Subbarao carried forward, Dr. Rajan also through the small finance bank, creating that. They all are with the missionary zeal, Reserve Bank of India, and has been pushing for that. And then the big booster dose came from government in the form of Jana Yojana, where I said that about 53.99 crore accounts have been opened. So what was the case in the past and now certainly change for the better. But if we is the small finance bank is a great contributor to that? I would not like to believe that. Small finance bank, yes, by nature, they are expected to be in that particular segment. They are in that segment, but the segment has its own handicap, segment has its own, I would say that, problems, etc. So keeping all this in mind, I don't think small finance bank are hugely excited for financial inclusion and catering to that particular segment. That's not the case. I mean, they have no other choice, but given a choice, and if they qualify, they would like to become a universal bank. I'm repeating the same thing that for them it's a journey, it's not the destination. So these are all not mutually exclusive. They are playing a role, but I don't believe that small finance bank has changed the entire contour of financial inclusion in India. That's not the case. But yes, they have their own utility, and the system needs those kind of banks definitely at this point of time. So I think I have done my time, and I'm happy to take any question provided I am capable of answering.
Thank you, sir. Thank you very much for this detailed introduction into the small finance banks and how it has evolved with the push by RBI over several tranches. And I think repeated attempts have been made at revitalizing small finance with a motive of creating some kind of help for what is called financial inclusion. And financial inclusion has been seriously taken at policy level, but in reality, it has not turned out to be a theater of delight as it happens now. I would like to thank you very much for providing this insight as to what is currently happening with the 11 of the small finance banks that are existing as of now, with their ulterior or hidden aspiration of becoming a universal bank given an opportunity. I think the small details that you have mentioned in terms of business model actually not working out, and therefore financial inclusion as an objective through small finance banks has become a mirage as it stands today. I think that's a pretty important and bigger insight that we have got today. And we are now all set for the Q&A in terms of the conversation. We are now at 7 p.m., sir. We have another half an hour to go by. And in the next half an hour, we'll do two clusters of Q&A. And members of the audience can also raise their hand. We'll take their questions as well. We will be inclusive to that extent, and we'll make it happen, small or big. But we'll start with Professor Prasad. I'll request him to start the cluster number 1. Over to you, Professor Prasad.
Thank you, Professor Rao. Thank you, sir, for introducing the topic and being very clear that the interlinkages between these two prime topics may not be as much as it seems. I think that much is clear. Let me start with the question on understanding this financial inclusion thing a little better. I mean, you have outlined that this is the level to which financial inclusion has taken place through the Jan Dhan Yojana. The national strategy for financial inclusion has also spelt out goals. Now, given what you are saying about the small finance banks, how can we do better on financial inclusion? If we take just that as the topic, we should do in order to do better on financial inclusion.
No, it's a very, very tough question you asked me. I mean, if you see the statistically, we are doing much better than what it was. If you, I don't want to reel out statistics, etc. You can go to internet and Google and T will help us to all the statistics. But in ground reality, still there is a lot of gaps. Just to give an example, like I live in Mumbai, and do my maid or my driver or dog walkers or all those kind of support service. I mean, do they have access to banking services? No, it's not. It's not. So in the process, what happened that we play the role of the bankers, of course, without any interest. So she needs the money because they have the ambition, aspiration to have their children doing well. They should have private tuition, go to English medium school and all. It's expensive. I'm a real life story I'm telling. So we need to, we like us, I'm sure there are many families there. I mean, we keep on, if you go to my kitchen, I'll see on the calendar is written over there, 30,000, then 25,000, 20,000, etc., etc. Now, banks don't find them worthy of giving loans. They don't have the credit score, so on and so forth. So I honestly, if you ask me, I do not know. Tomorrow, if we have a bank here, and I'm just sure that they're not everybody is they are getting into they're not migratory laborers from different parts of India, nothing like that. They are living here in the chawls. They don't have the right kind of fancy house there, but they have their KYC, they have their Aadhaar card, and they are living there. And but it's difficult for them to access the bank account. I mean, even opening bank account also becoming a problem. It's a stark reality. We can say a lot of things are happening. So in that sense, Jan Dhan has done a great job. But again, you see the other side of it. We don't discuss much. But I am told that there are thousands and thousands of Jan Dhan account actually being used as mule accounts, for the phishing and the financial scam. Like I lose money, 40 lakh, and this 40 lakh at the stage 2 get into pieces of 5,000 each, and that 5,000 each actually gets into some thousands of bank accounts, and those guys keep 50 rupees or 100 rupees or 500 rupees and pass it on to the others. So they are the mule accounts being used and all. So the only numbers should not excite us that yes, we have done this. There are lots to be done. And how this will be done, we kept on saying that financial education is important. That's obviously it's very important. But if you ask me, I don't have the answer. But what the banking system had gone through 10 years, 15 years back, right now, the insurance segment is going through this. The platform, the connectivity, the transaction, everything has been that Bima Nivesh, Bima Sugam, those things which IRDA chairman has introduced. That's now it's basically, and they are following the same way which the banking system has been doing. Like banking system has that SLBC, State Level Bankers Committee. Now, similar thing has been happening in the insurance sector, state level committees. Now, IRDA is asking each of the insurers to adopt certain villages or certain towns or Mufassil towns, etc., etc. So what the banking system had seen 10 years, 15 years back, early this century, as we speak, the insurance segment is seeing that. And the key element is the financial inclusion, the inclusion part. And as I said, financial, but the most important part, what I told you in the beginning is this, to all of them who are hearing this, inclusion is not the access alone. It has to be also the affordability. So the responsible lender. So unfortunately, as we speak, that's the problem. And we are talking about financial inclusion, making it wider and getting more and more people on the field, under the fold. That's theoretically, and that's the way it should be done. But what is happening, which Reserve Bank of India is concerned about and punished for NBFCs at this point of time, and it's something never happened in RBI's history, I think, that cease and desist order they issued. No, so what was happening is this. It's a very deadly cocktail of NBFCs, then loan apps, then banks, and anybody can get away charging any money. And also you are actually, the money lenders have probably gone, but now you are finding a different kind of money lenders wearing different clothes and exploiting the people, exploiting the masses and all. And technology is a big handler, a big aid to them. That all the loan apps what they're doing, and Reserve Bank of India also to some extent seeing helpless, because there are entities which are not exactly regulated by Reserve Bank of India. That's the situation. What is the way forward? I think way forward is the entities which is the responsible lending. What I'm just saying, the three things we required is this. One is access, second is affordability, and the two combination, access and affordability, under the overarching thing of responsibility. Unfortunately, what we are saying is this: these things are not happening on the ground always. So despite the best effort of the Reserve Bank of India as well as the government, there is a miles to go, to quote that whatever that English thing, poem, that we have come and we have advanced us in some way, but there are miles to. And if you ask me how do we go, honestly, I don't have the answer. Technology is a big enabler, but often we end up misusing the technology.
Thank you, sir. Thank you for being very clear about that. And it sets the platform for the next question. You're associated in some form. You understand the Jana Bank. So when we take this question of affordability, are there any use cases where this has been achieved by Jana Bank?
Money, or sorry?
You've talked about accessibility and affordability, but you put affordability as a critical point
Mm.
in this. So are there any use cases where Jana Bank has served this segment, some products?
No, don't misunderstand me, Dr. Prasad. I do not want to use or misuse this platform by talking about the entity with which I am associated with in the form of an advisor. It does not look nice, and it's also a listed entity. So we'll talk about macro level,
Yes, sir.
whatever you want to know, not particular any entity.
Certainly, sir. Any
That's-
small finance bank, good products which address the affordability need.
I mean, there are. I mean, there's no that I don't want to paint these entities in the same brush and all. Nothing like that. There are. I mean, I can't. I don't remember any product as such and all. But yes, there are. For instance, if you ask me that gold loan, as a gold loan was never a product in India even few years back. So from because gold is something Indians are pretty, reserved about taking out of gold from my, from my home and mortgage it to get loan, to get money, etc. Unless I'm desperate and some health issues to the money lenders, it had been done. But if you see dramatically how the things have changed over the last 4-5 years. Earlier, there was only two South based, that Muthoot Finance, and there one more was the gold loan and gold lenders. But now, if you see the gold loan, State Bank of India had a huge portfolio on gold loan, and almost all the small finance bank are also into gold loan. And gold loan is not a very easy thing to handle, as you're talking about the product, because here what happened is this: one is this, the purity of gold is an issue, and second is this, the velocity is very high. I am a borrower, I am mortgaging gold for 1 year, but I'll come back to you and take the gold back in 6 months' time. So it's a very difficult for a lender. It's not a very easy product. But gold loan is one thing which most of the small finance bank, in their own way, they are getting into it. Again, affordable housing is another thing which they have been doing that. Supply chain financing, I would say, again, if you look at this, the MSMEs and SMEs, thanks to GST, and now things are, the formal economy is getting larger. and also getting advantage of that, that's an advantage, and using that GST data, etc. Most of the small finance bank, at least some of them, again I don't want to talk about any particular entity, getting into a supply chain financing, which is very helpful for the MSMEs and SME segment. Things are happening, and but these are not all. It's not that unique. The small finance banks are only doing, not others are doing. Other banks are also getting into that and all. But small finance banks also, and probably small finance banks are going where some of the large banks would not be able to go. That's a separate story altogether. But these are some of the products: affordable housing, gold loan, and supply chain financing. And again, cash flow based lending also happening, which was earlier the very difficult part in Indian banking system. Now banks are learning and doing that. So yes, it's happening. But the problem with the small finance bank, as I said, it's not the right word. The problem, the challenge is raising the liability. The moment you hear I'm a small finance bank, you will think twice before keeping money with me. Even though I am a scheduled commercial bank, there is no difference between State Bank of India and me. Even though technically up to 5 lakh is covered by DICGC, the insurance part. Since economic liberalization, not a single bank has been allowed to fail. Cooperative banks is a separate story, but this genre of banks have not been allowed to fail. But still, small finance banks are finding it. That's their liability is an issue. So, which is why I'm repeating, they are running two banks under one bank. One bank is in urban area, which are raising money, deposits from you and me, competing with others, giving higher interest rate, and still finding it's a challenge, not a very easy thing to do. Other part is the lending to that segment where you can't lend beyond 25 lakh. Up to 50% of your loan portfolio cannot be capped at 25 lakh. 70%, 75% will be the private sector lending. So it's not an easy job, but they are doing as is the purpose is completely lost out? No, certainly not. But seeing all the challenges, and they all of them, given a choice, would like to get out of this sobriquet that's small. Small, had there been no small finance bank, suppose they have been called development banks, probably it would have been a different perception. But they all of them in their heart of heart want to get rid of this small tag. That's the challenge.
Thank you, sir. You have also identified a branding issue there in the labeling, and hopefully something will be done about it as we go along. We are at about 7:17. I think given the paucity of time, I'll hand it back to Professor Rao. If time permits, I'll come back for another question.
Thank you, Professor. I think the conversation is going on extremely well. We have a few questions from the audience as well. But before that, as Professor Prasad was mentioning in his last comment, it's a perception issue largely that we are seeing. It's a perception issue, although the purpose is not lost on the experiment that one has made, but a long way to go, as you said, miles to go. In this exercise, there are several leaders, several political and non-political leaders who have made their contributions to this happening and unfolding over several years. Definitely the purpose is not lost, sir. I think we need to keep faith, and let's see how we are not worried about metamorphosis of a small bank into becoming a universal bank, but the financial inclusion part, which platform would actually take this forward? Today, the financial inclusion, when we translate it into a responsible lending, I think an organized sector is taking over in the absence of an organized financial inclusion process. I think that's the worry more than anything else. There are two questions, sir. I will request the participants who have asked the question to quickly talk to you. That's an interesting question by Mr. Pradeep. You can raise your...
Thanks for the overview of the small finance bank. So in my mind, small finance was always connected to the Bangladesh experiment and success story of the Grameen Bank. So my question was, why can't we follow that model? If Bangladesh could make it a success there, why can't India also follow that in some form and maybe adapt it for an Indian need and take it forward?
The difference, what happened is the Bangladesh model, the basic difference between Bangladesh model and Indian model is this. In Bangladesh, the NBFCs, particularly the MFIs, are allowed to collect deposits also. So, and following that, the entire was the community of NBFCs. There are two types of NBFCs are there in India. One of the pure play NBFCs, and I'm not talking about the housing finance companies and all. I'm just talking about the NBFCs. So one of sort of the pure play NBFCs, and other the MFI NBFCs. Now MFI NBFCs need to have 75% of their exposure to the MFI segment. Now, citing the Bangladesh example, they have been periodically in talks with the Reserve Bank of India. They want their access to deposits, which the Bangladesh microfinance entities are entitled to. But in India, the experiment or the experience of the regulator about the raising companies. I'm not talking about those blue level companies, like the Bajaj Finance and Shriram housing, etc. Not that, but I'm talking about the different Ponzi schemes, etc., and the Sahara example, etc. So RBI is not comfortable at all. They would not like to give them in India, this is the cardinal principle is this: you are entitled to raise money in the form of deposit only if you are a bank. And of course, there are deposit taking NBFCs are there, quite a few of them are there. But but they are not microfinance NBFCs. They are the pure play NBFCs, like Bajaj Finance is one of them. So their liabilities consists of bank money, that is the money flow, the loan from the banks, as well as other institutional investors, and plus the you and me like depositors. But in microfinance segment, Reserve Bank of India would not allow this, because the Indian playing field, Indian term is very tough, is very, very different. And there are millions and millions of people lost money. And as we speak also, they keep on losing money to different Ponzi schemes and all. And Sahara is the classic case, which is not an NBFC, which is an RNBC, residuary non-banking company and all. That's the crux of the situation. And again, as I said, that the quote unquote, the responsible lending, that unfortunately what happens is, just to give an example, and just correct me if I'm deviating, microfinance, which are into this segment of supporting the have-nots and the small and medium enterprises, etc. They got into big trouble in 2010. The Andhra Pradesh crisis happened, and then Reserve Bank of India came out with norms, etc. What can they do and what they cannot do. Which is basically capping their loan margin, their money margins at 10% for the thing. So if you are raising money at 12%, you cannot charge somebody beyond 22%. That was the case. And among other things and all. And it took about more than 10 years. Into the 2022, Reserve Bank of India freed the interest rate. They said that, look, post-COVID, 2022 March, Reserve Bank of India announced, among other things, it said that now the cap on how much you can charge, etc., not there. It's a level play. It's just you wish to whatever it is, let the market drive it. And since then, what happened is now each and everybody, or I would say that I cannot vouch for each and everybody, but for most of them, majority of them has raised their interest rates. So and what Reserve Bank of India is saying is this, that you have to use your freedom responsibly. But because you got your freedom, and you will just keep on raising the interest rates. And then interest rate is only one component of their earning. Then they find multiple ways of doing that. There will be prepayment charges, there will be late payment charges, there will be processing fees, then they will be selling solar lantern and sewing machine and fridge and television, etc., etc. So all these things you bundle, you will find that they're actually charging 40-50%. And if you ask them, they will say, no, you go to the other part of the world, we are the cheapest. Microfinance in rest of the world is far higher. And they will say that money lenders charges far higher, etc., etc. But actual thing is this: these are the modern day money lenders. In a sophisticated, they are in suit, boot, good clothes. But when it comes to exploiting people, exploiting their borrowers, keeping everything opaque, not being transparent, most of them are doing that. So that's why the situation has come pretty bad. Financial inclusion only possible. We have to when everybody is a responsible financing. So again, what I said, many of you may not have noticed this. despite all these frills of SFBs and NBFCs and microfinance, etc., the state-run banking system, which is probably 60% of the banking system in terms of assets now, they continue to shoulder the message of financial inclusion. Carrying the message of financial inclusion is primarily on them. And I gave you one example is this: out of 53.99 crore PMJDY accounts, 42 crore plus have come from this state-run banking industry. Private sector banks' contribution is 1.67. So, in the financial inclusion space, quietly, silently, probably under the pressure of government, etc., our state-run banking system continues to play.
Now I'll request Mr. Shastri to raise his question.
I'm Dr. Shastri, and as an educationist and also an independent director for Urban Cooperative Bank, I want to put one question, because we are doing one pilot study on the financial inclusion of small vendors and also the street vendors. I found that the nationalized banks are not able to reach them actually. The reason forget about, because of there is a constraint from the bankers also, because I could understand from them that how many loans I can service in a day. So what about the recoveries? Supposing that I'm going to give a particular branch, if it cannot handle more than 10 per day, or supposing that it has thousands of, say, 500 accounts or loan accounts of small in nature, which is going to be less than 50,000 or something. So, or if I'm going to have 1,000, how many people I require to handle this particular loans? What about the recoveries? Each and every person has to reach them. To reaching them is a big task, actually. This is actually the cost of funding, or the cost of a loan is becoming too high. And because of that reason, actually, why you're talking about the 60% of the loans are going from the nationalized bank. The fact, when I am talking to informally to the branch managers and other thing, they're saying that it is out of the force we are doing that particular thing. A target is made, and that is reason actually we are going for that particular loans. And one more thing is, from the other side also, the perception, particularly the individuals or the vendors and the small vendors, they feel that it is not, the banks are not able, we are not able to reach because of the bureaucracy.
Well, I mean,
tedious formalities are going to be there. That is the reason we are not interested in going. And the banks are also not able to reach because of this particular high cost of recoveries, and also the failures of this particular loans, actually.
No, you are absolutely right. I mean, that's reaching out is whatever you said, if I summarize quickly, which is, one is that reaching out, the physically reaching out, it's a very expensive proposition, which is absolutely, you are right. Number two is this, the public sector banks are doing it, as I said, 54 out of 54 crore, 42 crore accounts are by them. It's not that they are very happy to do it, but it's under the pressure from government there, most of the cases. Now, how do you?
Thanks for the overview of the small finance bank. So, in my mind, small finance was always connected to the Bangladesh experiment and success story of the Grameen Bank. So, my question was, why can't we follow that model? If Bangladesh could make it a success there, why can't India also follow that in some form and maybe adapt it for an Indian need and take it forward? Thanks for the overview of the small finance bank. So, in my mind, small finance was always connected to the Bangladesh experiment and success story of the Grameen Bank. So, my question was, why can't we follow that model? If Bangladesh could make it a success there, why can't India also follow that in some form and maybe adapt it for an Indian need and take it forward? Thanks for the overview of the small finance bank. So, in my mind, small finance was always connected to the Bangladesh experiment and success story of the Grameen Bank. So my question was, why can't we follow that model? If Bangladesh could make it a success there, why can't India also follow that in some form and maybe adapt it for an Indian need and take it forward?
The banks and non-banks, banks and BCs, banks and other intermediaries, they need to complement each other. There is no competition. What's happening at this point of time, particularly in that, below the poverty line, that lane or the hinterland, and all, instead of collaboration and using the complementarity, they're actually competing with each other and how much I can give loan to somebody else, even that the person does not need it. So you will find people who are with burdened with 6, 7, 8 loans. And recently it came across one particular study which talks about over the 20% of people have multiple loans at this point of time. So in essence, 20% of that particular segment running the risk of turning into NPS, and they have to provide for it. And the way forward for financial inclusion for everything, of course, the responsible lending is one part. But the other part is this, as you rightly pointed out, how do we reach out and how do we do this is a collaboration. Using, exploiting complementarity and using collaboration, not competition.
Thank you,
So you
sir.
mean that actually there should be some subsidiaries, banks which are going to be coming for the nationalized banks wherein microfinance is going to be taken up?
No. So some of the banks they're doing on their own. They are like Kotak Bank has one microfinance thing. IndusInd has one bank. ICICI, sorry, Yes Bank was looking for it. They have their portfolio also in that segment. No, I'm just saying that for the reaching out, what you said, no, the BCs are there. Banking correspondents are there. They can originate loan and they can collect. It will be in the bank's books. And the BCs are the collector and originator. And there's for a fees they work on it. It's there. It's an established. In the Indian financial sector architecture, that's an established thing. But is this enough? No, we need to do more.
Yes, sir. Okay, yes, sir. Thank you.
Thank you, sir. Thank you. Thank you very much, sir. I think we are now at the close of the
Sure.
conversation. I have a last point, sir. That is, the motto of financial inclusion seems to have fallen between the have-nots and the have-yards on one hand. On the other, through the Jandan accounts, we have a large number of mule accounts as well, which is dangerously close to having a scam within the permitted system. Now, what are your solutions, one or two, to address this potential danger, which looks like a large number of these accounts are created by nationalized banks only. So looks like it's a state harbored scam in one way.
No,
Are there any solutions to address this?
there is a solution because banks are finding it very difficult because it is a complete, you need a separate session on that. It's basically on the other side of technology. Technology is my mobile is my bank. I don't need to go to and I can pay everything. I had been to interior Maharashtra on the border of Gujarat as an experiment, not carrying my purse with me. I just checked in Airbnb, which I paid from Mumbai, and 4 days I was there at a place called Dhanu. It's on on the sea beach and close to Gujarat. I did everything right from breakfast to my dessert to a bottle of water. Everything I did through this in that interior place through the mobile, that UPI payment and all. I was very scared that whether I'd be able to do that, but I could do this. So that shows the play of technology in this part of the world. But the other side of this is those kind of things. And all what is happening in the Mool account, they are KYC compliant, etc. So it's very difficult to weed them out also. So it's a struggle. And the Reserve Bank of India is looking into it. They have formed a committee. They're looking into it. Interpol is doing a lot of work. Singapore has been doing a lot of work in this segment and all. So internationally, this is an issue, and India to all happening. But Reserve Bank of India, my understanding is this nothing confidential or secret story. I'm telling you, they have constituted a committee to look into how do we actually digital payment more safe, etc., etc. So I think we need to wait and probably by early next year we'll get to know what are the steps, etc. There are many steps are being contemplated, but as we speak, that's a huge issue at this point of time. The digital banking, all the scam that's happening. In fact, Prime Minister Modi in his Mann Ki Baat last time he spoke about also this kind of scam.
Right, sir. Thank you. Thank you very much for this session, sir. I think you have patiently responded to all the queries that we have had, and also a few questions from the audience live. You have responded to them. This is a session with clarity, depth, and of course, we're restricted to pure 60 minutes to focus on financial inclusion vis-a-vis small finance banking. We have not ventured into the entire banking system where you have authored several books, and there are many other very interesting stories to talk about, but that is for some other day. We will request your time and expertise to talk about the entire banking system. There are many issues. So we thought we carefully restrict ourselves to only small finance banks as well as financial inclusion. And I think that's been dealt very well. I thank you on behalf of everyone who participated today for your time that you have spent with us. We will send you a few more queries, maybe by email. We will request you to respond whenever it is convenient. We continue to learn from you, sir, and we continue to look at you as a resource who can help us in this regard. Thank you so much once again, and I'll write to you about the summary, and you can probably correct it or add some value to it, and then we'll upload it on the website for the benefit of so many people who would like to learn about this very important subject. Thank you so much, sir. Have a great weekend.
Thank you.
Thank you, sir.
Thank
Good
you.
night
Good
to
night.
everyone.
Thank you.
Good night.